In this video, I will be showing you a really good strategy for the 15-minute time frame. Now, I have to tell you that this strategy is an only short strategy, so in this video, we won't care about buying trades, in other words, long trades at all. I would recommend to use this strategy on the major and minor pairs. I wouldn't recommend to use it on the exotic ones. Let's start because we are traders and time is money. So what you should know is the following. It is really basic. So the strategy contains 6 simple moving averages, not exponential, not weighted, not smoothed, but simple moving averages. And for the dynamic exit, we will be using simple moving averages as well as 2 other filters, and I will explain everything carefully so you can understand it and you can apply it the real markets. Now let's see the actual numbers. Our first condition is really simple. We would need a 54 period simple moving average first, and then we will need a 200 simple moving average. And we take a sell trade when the smaller simple moving average crosses below the bigger simple moving average. In this particular visualization, when the blue crosses below the red line. And this is our first condition. Now let's see our second condition. I have to tell you that you should follow all the rules for all the conditions at the same time, because if you don't do that, that will mean that at the end you will blow your account no matter what. Now, the second rule is just as simple as the first rule. The second rule is that we will need a 74 period simple moving average, and we will need a 150 period simple moving average. And the rule is that the smaller simple moving average has to be below the bigger simple moving average, so the blue line has to be below the red line, and here it is perfect for us, so our second condition is checked as well. Great. Now let's see the third rule, the third condition, because it is really important, and I have to tell you now that you couldn't do what you just shouldn't do what every trader does, and it is that if you have 2 conditions that are good, you take the trade because you are impatient and you want to trade and you think that you will be missing out on a good trade. It is not the truth. I tested this strategy with Dukascopy tick data in MT4 because I coded this to an automated EA that I can test, and it is not the truth. You have to wait for all the 3 rules to be perfect. So let's see the third rule. The third rule is that we will need a 34 period simple moving average, and we will need another 77 period simple moving average, and the rule is the same. The smaller simple moving average has to be below the bigger simple moving average. So basically the 34 period simple moving average has to be below the 77 one, and it is perfect for us. So now all our 3 conditions are great. The cross happens here. I will put those numbers one more time to check that we can take this trade. Yeah, so here it is. Yeah, that is the crossover. It is perfect. We can take this trade, and actually this trade was taken by the algorithm that I tested this strategy with in MT4. So this is not just some random trade that I drew to the chart. It is a real trade that the EA, the automated algorithm, did, and I just drew it up so I can show it to you in a visual way. Now you know the entry rules. I hope you understand it well. It is not that complex. I recommend for you to write it down, learn it, and try it out. Now let's see what are our exit rules. Our exit rules are pretty simple as well. First, I will tell you the two filters, or rather the two additional parameters to the dynamic exit. The first is pretty important. It is a strategy for a fairly low time frame. So now I won't use like thousands of minutes of X parameter after the entry that I will explain to you further in a minute. But now we will use a parameter that is 500. Now, what does it mean? It means that only after 500 minutes you can start to look for a dynamic exit. So if you enter a trade and it will make you are in profit, so it is not an issue, and it will fulfill the dynamic exit rule, the crossover that I will tell you, you can't take the trade if the 500 minutes hasn't passed yet since the entry. It is really important. I tested thousands of EAs and indicators and systems, and the truth is that this parameter is working, and it is truly an additional safety and profitability factor to your strategy. So now the second condition is a crossover where we can close the trade with dynamic exit. And the crossover is when we have a 34 period simple moving average, and we have a 120 period simple moving average. And the dynamic exit happens when the 34 simple moving average crosses below the bigger one, so the 120 simple moving average. As you can see, it is really simple, nothing fancy. The entry rule was much tougher, but in my opinion this is a great rule, and I actually saw the statistics and analyzed it, and it did good on these markets. So it is not a bad dynamic exit at all, alongside with, of course, the X minutes after entry rule. That is really important. The third condition is very simple as well. The third condition is that you have to have a safety stop loss. I tested it, so believe me, it is pretty important. If you don't have a safety stop loss, there can be a crash, a crisis, there can be something that will blow your entire account. It is not unheard of that the market just go crazy, and just all the markets go crazy, and there's a crash in the world and you blow your account. And the funny thing is that if you would have a safety stop loss, you would save your entire account, because it would be just one single losing trade when an entire crash is happening in the world. So it is a crucial element, and you don't have to worry, because there won't be much time when this stop loss will be triggered, because I tested, and in 2 years it was just 2 times, so it is nothing. And I would recommend a 100 pips safety stop loss for this strategy. Now, I hope you understand the concept of this short trading strategy. Now I will show you the real 99.9% Dukascopy tick data. So as you see the test results, we have, and this is my biggest, this is in my opinion the most important part, is the risk to reward ratio. And we have a 1 to, and almost 1 to 2 risk to reward ratio, and that is just great. It is great to see it. And we have a better than 50% win rate alongside with this risk to reward ratio, which gives a good just a good advantage and edge over the market. As you see, our largest profit trade is double than our largest loss trade. That is great as well, and the drawdown is really low. Of course, I used low lot size, so in my opinion you can even double or quadruple the lot size, and even then it won't be too much, and the profit will be of course much higher, but it is my taste. I hope you enjoyed this video. If you did, subscribe to my channel because it is a starting channel, and you know, if you subscribe and like the video, I know that it has something in it, and I will make more videos like this. Ciao.